Dear friends, welcome to weekly view on markets. Markets consolidated during this week with small gains and losses. Nifty gained whereas mid cap and small cap indices were weak during this week. Quarterly one results comes to an end. Results are of average type, hence could not inspire the markets. Chart seems to have taken support at the last week's low. Charts indicate further consolidation in the market. Trade tariff by US hangs in balance, which is keeping the markets on tenterhooks. Domestic institutional investors continue to buy with the support of SIP inflows by retail investors. Markets are likely to be sideways and consolidate for few more weeks. Nifty closed at 24,631 with a gain of 35 points, that is 0.14%. Bank Nifty closed at 55,341 with a loss of 179 points, that is 0.32% loss. Mid-cap index closed at 56,504, it lost about 0.76%. Small cap index closed at 17,547, it lost around 145 points, that is minus 0.82%. India VIX study at around 12.35. There were equal advancing and declining stocks, hence the market consolidated during this week. Healthcare, pharma sector gained around 2%. PSU banks, auto sector, media all gained around 1%. Public sector companies, information technology sector, manufacturing all consolidated with small gains. Consumer durables lost around 2.49%. Realty sector, FMCG, metals all lost around 1%. Private banks, energy, commodities, NBFCs all lost 0.2 to 1%. The overall market action was of consolidation during this. Now let us look at technical charts. This is the daily chart of Nifty index. I had drawn this line in the previous week. The market seems to have taken support around this level and it has gone up. And Nifty is likely to stay above the support level of 25,400 and it is likely to consolidate in a broad range of 24,000 and 25,000. This is a chart of Nifty mid cap index. Mid cap index also seems to have taken support at around 56,100 and from there we can see a pullback and this is likely to stay above the support level and there may not be big upside, so hence it may also consolidate. This is the chart of Nifty small cap index. The small cap index also seems to have taken support at around 17,400 level and it has given a pullback. We can see small red and green candles. It shows consolidation and this consolidation may continue for few more weeks. This is the chart of Bank Nifty index. The story is same with the Bank Nifty index also. This is also seems to have taken support at around 55,100 and we can see clear kind of consolidation around these levels. This consolidation may continue and the support also may hold at these levels. Now let us look at some of the market fundamentals. India's macroeconomic fundamentals continue to be strong and stable. RBI forex reserves is at 693.61 billions US dollars. It is up by around 4 billion US dollars during this week. Foreign exchange rate is at 87.66 rupees per dollar. Dollar index is at 97.84. Both rupee as well as dollar index, they are quite steady for last few weeks, and this may continue for some more time. Brent crude price is at $65.85 per barrel. Lower crude price is benefiting. We have seen that oil marketing companies have announced quite good results during this quarter because of the lower crude prices, and crude oil producers like ONGC, Oil India, their results have been weak due to the lower realizations on crude processing. Gold is at 99,860 for 10 grams 24 carat. Retail inflation for July has come at 1.55%, which is lowest in last 8 years. The inflation has been steadily coming down, which is quite good for the economy. RBI is likely to focus on GDP growth as inflation is under control, as per the statement from RBI governor after the announcing of retail inflation figures. He is quite confident that inflation will be contained, and hence the RBI wants to focus on growth of the economy. FIIs have sold 10,172 crore during this week in equity. DIIs continue to buy. They have bought 19,000 crore in equity during this week. And at level, DIIs are buying. They are supported by SIP retail inflows. Domestic investors are showing good faith in the economy, and they have been continuously investing in mutual funds. Q1 result season has ended. Results are of average, and revenue growth has been around 6.16%, and profit growth is around 9.35%. The results are quite disappointing. The present valuations are quite high, which requires 15 to 20% growth in profits, and earnings recovery or the profits of the companies is elusive due to one or the other reason. Every quarter we keep on hearing that next quarter results will be good, but uh, earnings recovery is elusive. That is why markets are jittery, they are sideways. Valuation is not supported by the earnings, and earning visibility not very clear due to trade war, that is tariffs, trade tariffs, as well as the global situation like Russia, Ukraine, and Israel, Hamas. All these tensions still continue globally. So that is keeping the market in a jittery position. Despite all this, DIIs continue to buy. They show faith in Indian economy. So as long as there is enough liquidity, I don't see any big fall in the market. Even if it falls due to some global event, the fall will be for a short while, as DIIs will buy on dips. So investors should have faith in the economy, and our GDP growth is around 6.5 to 7%, which is quite good, and investors will make money in the long run. So please stay invested and have patience. You will get good returns in the long run. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions. We will meet again next week. Thank you.